Something just happened in New York that the global financial world can't ignore. A man with no Wall Street ties, no billionaire donors, and no allegiance to the traditional rules of finance, just took one of the most powerful political seats in America's most economically vital city. Zohran Mamdani, a Democratic socialist from Queens, didn't just beat former Governor Andrew Cuomo, he dismantled the very foundation Cuomo stood on: money, influence, and establishment power. And while some may see this as just another political shift, insiders know better. This is a tectonic crack in the foundation of how finance and governance have operated for decades. Wall Street is no longer whispering about him. They're watching closely. New York City isn't just a cultural capital, it's a financial epicenter. The New York Stock Exchange, the NASDAQ, countless hedge funds, banks, insurers, private equity firms, and fintech companies operate within its 5 boroughs. Billions are made and moved here every day. It's not just a city, it's the beating heart of global capital. So when someone like Mamdani takes the reins, it sends shockwaves far beyond the East River. This isn't just about tax policy or housing reform, it's about changing the DNA of how capital flows, who controls it, and who benefits from it. Let's start with real estate, because in New York, property is power. Mamdani's proposed vacancy tax could slam a market already fragile from post-COVID shifts. For decades, wealthy individuals and global investors have bought New York condos not to live in but to park wealth. Entire buildings in Manhattan sit empty, safe deposit boxes in the sky. Mamdani wants to end that. His tax targets landlords who leave units unoccupied, pushing them to either rent or sell below speculative prices. The impact? Reduced investor confidence, declining luxury valuations, and potentially a cascading effect on mortgage-backed securities and REITs tied to NYC holdings. Now extend that anxiety to commercial real estate. Office towers once filled with bankers and lawyers now sit half-empty. Mamdani has made it clear he supports converting underused commercial spaces into public housing or community centers. For developers, that's a direct hit on long-term revenue streams. For banks and investors holding commercial property debt, it signals risk. Vacancy isn't just a real estate problem anymore, it's a financial liability. And that's how small policy ideas become big financial consequences. Then there's Mamdani's stance on financial institutions themselves. He's called for publicly owned banks, redirected city deposits from Wall Street giants to local credit unions, and even floated the idea of removing city pension funds from hedge funds and private equity altogether. If implemented, that would disrupt the traditional flow of billions in institutional capital. The ripple effects: lower assets under management for top-tier firms, less leverage for lobbying power, and possibly the beginning of a slow-moving shift away from finance-first governance. And Wall Street isn't just worried about what Mamdani will do with city funds. They're watching what he inspires, because his victory wasn't bought, it was built. Block by block, voter by voter. That sends a dangerous message to other cities, other candidates, and other activists who've long believed the system couldn't be cracked. If New York, the finance capital of the world, can elect a socialist with open hostility toward corporate greed, then who's next? Los Angeles? Chicago? Atlanta? The fear isn't just that Mamdani will raise taxes, the fear is that Mamdani is contagious. Even tech investors and venture capitalists are shifting uneasily. Mamdani has voiced opposition to the gig economy's exploitative structure, calling out companies like Uber, DoorDash, and others for underpaying workers. If gig regulation tightens under his leadership, especially in New York City where such services thrive, startups and scale-ups could see rising labor costs, forced unionization, and a shift in valuation outlook. VCs may begin to look elsewhere. Innovation doesn't stop, but capital always moves where it's safest. International capital markets aren't immune either. New York real estate has long been a hedge for oligarchs, foreign investors, and sovereign wealth funds. If Mamdani's policies make it harder for anonymous LLCs to buy property, or harder for shell companies to hide behind tax loopholes, those dollars may migrate to Dubai, Singapore, or Miami. In isolation, that's not catastrophic, But in a volatile global economy, even a 5% shift in capital direction can set off wider market recalibrations. Mamdani has also spoken about ethical banking, sustainable finance, and anti-austerity budgeting. For ESG-driven funds, this may sound like alignment, but there's a catch. ESG thrives in environments where environmental and social goals don't directly conflict with returns. But Mamdani's approach is blunt. If the financial system doesn't serve the people, it must be rebuilt. That creates uncertainty. And markets hate uncertainty more than anything else. His vision of wealth redistribution includes taxing high-frequency traders, regulating hedge funds, and potentially reshaping how New York treats corporate subsidies. If tax incentives are pulled back from large firms, that could lead to relocation. If NY becomes known as anti-corporate, it could slow down IPOs and new capital formation in one of the world's top financial markets. And yet, amidst the panic, there's another side. Some economists argue Mamdani may actually create long-term economic resilience. A better-housed population is healthier, more productive, and less prone to crime. Redirected police funds toward education, housing, and health could ease strain on emergency services and city hospitals. In the long run, the argument goes, economic justice leads to better outcomes for everyone, including businesses. But the short term? It's all about turbulence. Investors will watch for signals. Will Mamdani get the city council on board? Will property values fall? Will big firms divest from NYC? Or will a new wave of ethical finance emerge, reshaping capitalism's most important city from the inside out? The answer won't come overnight. But make no mistake, Mamdani's election was more than politics. It was a disruption event, and in a financial world that thrives on control, predictability, and the status quo, he's the biggest variable to enter the system in years. Follow us for deep dives on how politics is shaking the global financial system from the inside, because this isn't just about New York anymore, this is about the future of money.